U.S. or Europe experienced in 2008. Worse than the Great Recession. If anything, it's closer to credit or thing like the Great Depression, but in China. It's very, very, very bad, and it bears out in the numbers. So what we're seeing is China on the downfall, and unfortunately, because I don't want anything bad to happen to China, but the facts are facts. They're not able to collect the cash. Their GDP may be increasing, but corporate earnings and household incomes are not. And they're not able to tax it, and they're already taxing at such a high burden. The absolute dollars of taxes are falling while the uses are rising. When you look at that from a government standpoint, that means the U.S. can continue to fund whatever it decides to include national defense at levels that that no one even understands, can even fathom.
Let me ask you this, Joel, because for the folks at home, specifically those living in the U.S., they're going to say, fantastic news for us, Joel, thank you. But if we look around right now, we might not be feeling that. When do we get to start reaping those benefits?
Well, that's an issue. So we need the supply chain super cycle. It's going to need a few quarters to fix itself. The shale renaissance, right, in oil and gas in the United States is going to take a few quarters to a year plus to fix itself. But the market tends to move ahead. So while we think there's going to be choppy quarters ahead, we're talking about the next 2 to 3 decades of U.S. super economic dominance over the rest of the world, and the numbers bear themselves out. I mean, it's when you're using uniform numbers cleaned up across the world, it's so obvious what you see. Corporate America right now is generating more economic earnings, economic profit, than all the rest of the companies of the world combined. Right? To say China's number 2 and the U.S. is number 1 is such an overstatement of China's strength. Yes, China is probably number 1 of a number of countries, but add all the countries together with China, and it still doesn't even come to a third of U.S. corporate America earnings. It's unbelievable how strong these fundamentals are. And U.S. corporate credit is unbelievably strong, even with rising interest rates. Right? Rising interest rates is not a problem. High interest rates are a problem. So even if the Fed raises another 75 basis points, and frankly, even another 75 after that, it's still 60, 50-year low interest rates. High rates are a problem, not rising.
Do you think that they'll revert back to a point and start QE again?
That they'll have It remains to be seen. I think they have the ability to do it if they need, once they fix. But the Fed, one of their biggest issues is the concerns is full employment, and U.S. for the most part has very, very, very strong employment right now. So they have the ability to raise rates a bit, knowing that by raising rates to stem inflation, to cool off, I think, this pandemic rebound, right, that we've had in growth, that we'd be able to settle things a bit, calm things down. I don't think that's terrible. I think the Fed has room to move on that, and should things get strong again, have room to use QE if they have to, but I'm not using those words right now. If anything, we'd see even increased interest rates, a stronger U.S. dollar, and the Fed's ability to fight inflation with this very, very strong employment numbers to back it up. As long as we have more or less a gridlocked Congress and what have you, and it doesn't sweep strongly one way or the other, you tend to have an ability for corporations to move, to invest. The bigger problem is when rules and regulations sweep so far one way or the other direction on a pendulum that it's hard for companies to plan, because they're like, I'm not sure if I can plan for what could happen in the next year or 2 or 3. But as long as we have some amount of gridlock, which I argue that's sort of what you're seeing right now, and we'll see what happens come this fall. But if it maintains at some level so that you can't just have sweeping regulations one way or another, it allows companies to say, all right, good, I'm willing to invest. I'm willing to invest in the supply chain. I'm willing to invest in the shale renaissance, and that bodes very, very, very well for the U.S. economy and for Americans in general.
And just quickly, you mentioned the U.S. dollar. I'm just curious to get your thoughts. I know you're bullish America long term, but let's look at what's happening in the USD here. It's slowed down a bit, so folks are now wondering, is this it for the U.S. dollar? Do you think it's just the best house on a bad block? I mean, what are your thoughts on the USD?
Well, so let me say in a big picture level, the idea that the U.S. dollar will not be the global reserve currency is crazy talk. It's silly to think that the U.S. dollar. So when you're looking at the U.S. stock market right now is bigger than the rest of the world combined, right? The rest of the world's companies, U.S. corporate earnings. So if you want to get dividends and you want to get a return or capital gains, bigger than the rest of the world combined. If you want to get a decent rate on a AAA rated bond, you go to U.S. Treasuries. You can't go to other countries. You're going to get a negative rate, right? In some cases, or a super negative real rate. Unlike in the U.S., where you're actually getting a pretty generous, 2 to 3% on a treasury. And so, if you think that the world's sovereign funds, the world's endowments, the world's money, all the wealthy people in the world are forced to invest in U.S. stocks and U.S. bonds to rely on the U.S. banking system and the SWIFT system around the world, the idea that the U.S. dollar can't be the reserve currency is just kind of crazy, because you'll constantly be transferring it back into the majority of the world's capital, which is domiciled in the United States, right? Which you see both from corporate earnings and market cap. So at a big picture level in the dollar talk, I have to mention that right away. And I know other people disagree.
Yes, certainly a lot of folks that have come on this show would definitely disagree, saying, well, Joel, we saw with the Russian invasion of Ukraine and then the sanctions that countries like Russia are finding solutions outside of the US dollar. And we're going to see other countries following suit, the BRICS. So wouldn't that lead to the demise of, not always thinking that it's just going to be the USD as the global reserve currency?
So here, if you just think about the MSCI indices, right?
Yeah.
Of MSCI developed markets of, 30 countries, only one of them is Hong Kong. The rest of the developed markets are all US dollar based, right? And I'm talking about the rest of the world. Now, if I start saying, what if we take Russia? Russia's a very small economy, right? Russia's taxes in a year are only $350 billion a year versus the United States, which collects $4.8 trillion a year. So think about the relative strength of the governments when you think about that, right? And from the standpoint, not just of GDP, but are there corporate profits in Russia with which to be taxed, just not like in the United States. So when you start looking at global power and global economic power around the world, and you look at China or Russia or any of these countries, you just don't see the money. It's not there. And so when you look at the developed world, meaning the countries with the most liquidity, the most developed markets, the most capital formation and what have you, right? Of all of them, the only thing you're really losing is Hong Kong. And the rest of it is all US centric. Because some people have talked about, they say there's an end of globalization. No, what we're seeing is a re-globalization around the United States system, the United States laws, United States contracts. Let me throw in the Fifth Amendment. And I'm talking about the Fifth Amendment, the right to, to not self-incriminate. I'm talking about the Fifth Amendment that says the government can't take your stuff, right? Under the Fifth Amendment, the government can take your stuff. Is that the case in other countries? And so when you see the developed world that respects, right, private property and the right for people to keep their stuff and not let the government just come and take it, you see a developed world with the dollar around it, right? It's crazy to kind of think that whatever Russia and whatever China does and throw in a few other countries, right, Cuba, I don't know, whoever, Iran, it's just not enough to offset, right, the value, right, of what goes on in the rest of the world. Yeah, it just isn't enough. Yeah.
Okay, I need to bring you back another segment to talk more about that.
Sure.
But bringing it back to Perfect Stock, just tell us a little bit of what we can expect from it, where we can get more info, Joel.
I think it's wonderful. So what Shaken and I and our teams have done together is look at the system he's been building over 10 plus years and the system we've been building for 20 plus years and said, what if we took the best output of our fundamentals? Because he's not using uniform accounting. He's still using GAAP numbers for his fundamentals, but he's using all kinds of amazing timing indicators that we don't use. And so you put together and you find, generally speaking, we're still looking at the same stocks, but the buy and sell signal windows that he allows us to see when we put them together gives us a better timing on it, and we see better results across the board. We look at our ideas together. So we basically take our systems, and every month we say, here are the best ideas of both the short-term timing nature, but also have really, really strong fundamentals. Our worry is that we wouldn't see an overlap, but we saw 130 something, what we call perfect stocks that line up in both of our systems, and the performance is fantastic. And